Welcome back. We are joined today by Shaun Rein, an author and also the founder and managing director of the China Market Research Group. So thank you for coming on the program.
It's a real pleasure to be here, Glenn. I like a lot of your previous guests like Jeffrey Sachs and John Mearsheimer. So I'm honored to be here, and thank you for letting me have an opportunity to perhaps give a different perspective than a lot of my fellow Americans have, because I have been living in China for most of the last 28, 29 years. So I might have a slightly different perspective than the traditional media.
No, I appreciate that. And again, it's the China experts of 10 years ago, the China 2016. It's not the same China anymore. And you see technologies are changing fast. China's changing fast. And indeed, the world is changing fast as well, which is why, I thought a good opening question would be to what do you see being now the main opportunities and challenges in this current stage of China's economic development? Because again, the economy is very different from what it was 10 years ago.
Yeah, that's a great point. I think China in 2016 and China in 2026 are completely different. And I'll answer your question about some of the challenges like real estate, consumer anxiety, demographic time bomb. There are definitely some challenges that are facing the economy. But I think when you watch a lot of other shows and when you watch, China File from the Asia Society, they bring in a lot of China experts. They bring in a lot of people from Europe or the United States who did live in China for 10, 15 years, maybe even longer. But here's the thing, Glenn, a lot of these people left China in 2015, 2016, and they've barely been back. You see someone like Jeremy Goldkorn, who did the Seneca podcast. I'm not sure he's been back in the last 10 years. Bill Bishop has only been back once or twice in the last few years. So I think one of the things that's happening, Glenn, is political leaders and business people in the Western world are getting influenced by people with outdated information. So when you look at the economy now, just a year ago, January of 2025, I was meeting with some of the world's wealthiest men, hedge fund billionaires, CEOs of Fortune 500 companies. And I remember one who had been quite bullish on China in 2016. He told me last year, China is uninvestable. And he never would invest in China again because he's been getting information that to me is outdated. And if you look at it, Glenn, last year, the Chinese equity markets were the second best performing in the world after the Korean ones, up almost 30%. So the key is getting key real information. So what are my concerns on the economy? I think first and foremost, I am quite concerned about real estate. So housing prices have dropped 30 to 40% in tier 1 cities, sometimes even more in tier 3, 4, and 5 cities. Now, the problem is not a financial crisis. So we're not going to have a 2008, 2009 crisis like we did in the United States, where there was banks like Lehman or Bear Stearns were collapsing and there was a systemic financial threat. What's more happening is stagnation. Because unlike in the United States, in those years, most people in China have put 50 to 100% down on their homes. So their mortgages are not underwater. So you're not seeing panic selling. You're not seeing people going out and cutting prices by 70% just to get sales. So what's happening, Glenn, is that actually volume is anemic. So you might see a house go up and it takes a year, year and a half to sell. Now, this is a problem because previously 30 to 35% of the economy had to deal with real estate in the 2010s. So the first problem we're having is because you have so much money for what Chinese, if their wealth is put into housing, they don't feel as rich, which is why they're not going out and spending. But the bigger issue is it's just this overall anxiety that's hitting the country. And so some of the movers and shakers are not investing. They're not starting companies like they did in the 2000s and 2010s. That, to me, Glenn, is the biggest issue. We have to build confidence up back in the Chinese consumer. Because again, Chinese are sitting on 20 trillion US dollars of household savings. People here aren't poor. They're not panicked. There isn't a systemic financial threat, but they're holding on to their purse strings and they're not spending money. And that's the issue China needs to address because it has a spiral down effect on younger Chinese not willing to get married, not willing to have kids, which will have a demographic issue 20, 30 years from now. So there are real challenges, but it's not as bad as those people who left in 2015, 2016 say. And that's why if you had listened to me January of last year, you have made a ton of money in the Chinese equity markets.
Well, what are the main opportunities then, as you point out? People could have made a lot of money because China really has pushed very hard into its industrial policies, developing AI, the semiconductors, EVs, the green tech. Well, where do you think the main push for global leadership is going at the moment? But both, again, when you say China, some of it's, of course, subsidized and supported by government in various ways, but of course, a lot is also organic, responding to just the market, the direction. But how do you, what are you looking at the moment?
Well, that's a great question. I think when you look at it, let me answer it from a geopolitical standpoint. China, in my mind, actually is more of a natural partner with the United States than even Russia. I think that in the Western world, they view that China and Russia are best friends stuck at the hip. I actually think there's a lot of mistrust there, but these two countries have come together as a matter of survival because they feel that the United States and NATO are trying to destabilize China, contain it, and you've seen it, right? You've seen it with Joe Biden putting on economic sanctions as well as export controls on high-tech industry. You've seen it with Trump threatening now with Venezuela, and now he's the acting president of Venezuela. There's a question whether or not he will allow the Venezuelans to continue to sell oil to the Chinese. So the Chinese, about 4% of their overall oil comes from Venezuela. So that would be a real hit on them. So the question, Glenn, is what should China do? And so starting during the Trump first administration, they decided to focus on indigenous innovation. And self-reliance. So it's not just semiconductors, it's not just AI, it's everything. So, China buys a lot of beef from Brazil and Argentina. Now they're focused on building up their cattle herds in Shandong province. They've been buying a lot of soybeans from Brazil. Now they're looking for alternative sources. Instead of buying blueberries and seafood from Australia, you now see that China's building up huge blueberry, strawberry plantations or fields in Yunnan province. So to answer your question, the first thing is really, unfortunately for Western companies, the reality is that Chinese companies are starting to focus on self-reliance because there's a fear that the Western world will sanction China the way that they sanction Russia, and then they'll never be able to get access to products. So again, beef, blueberries, but even more importantly, Glenn, is technology. What we've seen in the future world is that whoever controls AI, whoever controls semiconductors and sets the tech stack and technology standards is going to be enormously powerful. And if Trump, if Biden, the next president, if they continue to put export controls on NVIDIA chips, then that's going to destroy the Chinese economy. So the best place to invest right now is in Chinese technology. And you see companies like Minimax, like Cabricom. These are the Chinese versions of NVIDIA. And here's the thing. You look at somebody like Eric Schmidt or Sam Altman, right? Sam Altman, the founder of OpenAI a year and a half ago, said that China was 10 years behind the US when it comes to AI. Eric Schmidt, who is the former CEO of Google, said China was 2-3 years behind. And pretty much after saying that, Glenn, DeepSeek came out. And you've seen Alibaba, you've seen Baidu, you've seen tons of Chinese companies have been emerging with technology, which took these guys by surprise because, again, they're getting information from China watchers who haven't been to China in 10 years. And so, I love America. I'm American. I don't want to see America hurt. I don't want to see China hurt. But in order for America to do well, they can't underestimate China's innovation capabilities. Now, that's great for investors if you're allowed to invest. Now, what's happened under the United States is they've banned a lot of private equity and some mutual fund investors from buying into these Chinese tech stocks. So you're going to lose money out if you're an American investor. That's a great opportunity for Norge Bank, for you guys up in Norway that might not have the same political constraints. And you could invest in Chinese indigenous innovation.
Yeah, there's this almost a catchphrase from the 2010s, which was the United States innovates, China replicates, and Europeans regulate. But well, the Europeans still regulate, but I guess China, the copycat or reverse engineering, trying to catch up, this whole thing, it feels very 2010 to 2012. I don't know. It seems like that time is behind us. Again, when you go to China, a lot of the technologies companies, they're not, they're innovators. It's I think this is some of the rhetoric, which is feel good. That is, well, they can only try to catch up with us. That's all they can hope for. I think this is very damaging to this assumption. But
absolutely, I wrote a book, Len, in 2014 called "The End of Copycat China." And I predicted that China would become an innovation powerhouse. And Silicon Valley laughed at me. I mean, I got pilloried in the press by the Silicon Valley types. Here's the thing. China has the capital, it has the government support, it has the ecosystem, and importantly, has the engineers. So it's going to catch up, if not surpass the United States in a lot of different technologies. Now, what happens in America is, to their credit, the Americans have more venture capital. It's very, not easy, but if you have a great idea, you can raise seed capital. It's not so easy in China. You don't have that innovation VC Silicon Valley or Austin, Texas atmosphere. What China is very good at is not inventing, but taking something that the Americans did early and then throwing tons of money at it, tons of engineering, and improving on it. It used to be business model innovation. Now it's actually technology innovation, but they're catching up very quick. And if you look at it, Nature magazine just published recently the top, tech and AI universities in the world, and almost all of them are coming from mainland China right now. I think a degree from Zhejiang University or Tsinghua is going to be more valuable than a degree from Harvard or MIT in 10 years. Because China's really changing the curriculum in schools while the United States still deals with the tenure. Like, I went to Harvard and some of my professors are still there, 25, 30 years later, and they're just peddling the same misinformation on China and in technology today.
I think it was a good example of this was in 2011. You had Elon Musk. He was making, he made a dismissive remark and laughed about the idea of China building electric cars, and that was in reference to BYD. And we saw now recently BYD is now bigger than Tesla. So it's really shocking to see, like, no one heard about Chinese-made cars almost. This was a non-thing, and then suddenly for coming out of nowhere to now being the main producer and really, taking such a leadership. It is quite extraordinary how quickly this has happened. Now, all these decades of various Western and Japanese, Korean cars dominating the market, suddenly, all of them being pushed aside. It's quite extraordinary. But sorry.
Absolutely. Yeah, absolutely. I mean, I just flew in from Thailand last night. And if you go to Singapore, BYD has replaced Toyota and BMW as the biggest seller of autos in Singapore. And I just got in from Thailand last night when I booked a premium car on Grab, which is the Thai or Southeast Asia version of Uber. I expected to get a Toyota. Instead, I got a BYD. So even the Thais are viewing BYD as a premium company right now. And I think, again, there's been a lot of criticism that this is about subsidies. And that the Chinese government is using unfair advantages. But here's the thing. When you look at Tesla and SpaceX, and, Elon Musk is a great revolutionary innovator. But if it wasn't for subsidies from the US government, there would be no Tesla. So I think one of the problems is America especially, they criticize China for things, whether it be subsidies, whether it be military deterrence, whatever it is. But it's actually very similar to what the Americans do. It might even be the Americans do it a million times worse when it comes to subsidies and economic coercion. And I think you have to look at the German and the American automakers for not listening to their teams on the ground to understand how fast NEVs were taking place. It's not like they didn't have warning. I'll give two examples, Glenn. Right before COVID hit, I met with the global CEO of one of Detroit's biggest CEO automakers. And I sat him down and I said, look, you need to be working with companies like Huawei and Alibaba and Tencent and try to create a technology ecosystem with your cars, because Chinese are going to view cars no longer as engineering marvels, but as mobile phones on wheels. And this global CEO had never heard of Alibaba, had never heard of Tencent. So imagine a Chinese company saying they've never heard of Google, never heard of Facebook. So this guy was woefully ignorant. The second part is I said Chinese are going to be adopting NEVs and technology. And this guy was paying me like 10,000 US an hour to talk. And our entire conversation went from NEVs to, would Chinese want touchscreens in their cars? And should it be 9 inches, 11 inches, or 13 inches? So I was trying to warn this Detroit CEO, 6, 7, 8 years ago, and they were ignorant of it. And then Volkswagen was probably even more ignorant in a way, because during COVID, a lot of their executives, their German ones, were based here. And COVID was harsh. It was not easy to exist in China during COVID. And they had about 4 or 5 dozen executives who came here, couldn't handle it, and wanted to move back to Europe. Now, they were hired by the joint venture partners in China, which meant that if they quit and move back to Europe, they lose, I think, about a 50,000 euro bonus. But most importantly, they wouldn't have a job. The joint venture couldn't transfer them back to Volkswagen. So a lot of these guys were like, I'm going to quit, but I'm going to look for another job first. And so they spent a year and a half, not focused on Volkswagen in China, but focused on getting their families into the right schools, themselves getting the right jobs back in Europe. And that's why Volkswagen and Porsche have absolutely collapsed in China, right? Porsche sales have down 40%, from their highs. So it's not that China's doing unfair subsidies. It's that I think a lot of the Western brands are ignorant about what's happening on the ground, and they refuse to admit, like Elon Musk did 10 years ago, the fast speed of Chinese companies moving up the value chain in terms of quality.
Yeah. Well, people could be excused though for not knowing better, because as you said, it's given that it's happening so fast. People who confidently knew China only a few years ago, it's hard to admit you don't know it anymore, that this is a big problem. And I think you're right as well. People often present Silicon Valley though as this just allowing people to innovate, leave them alone, and then they will come up with the greatest things. But which is true, there's a lot of brilliant people there. But it's also true that Silicon Valley has been subsidized massively, some of it indirectly, of course, through government contracts, military contracts. But it has been it didn't appear out of nowhere. So yeah, so that's a good point. But let me ask
about Palantir, right? Sorry? Palantir was backed by the CIA VC arm. Palantir and Alex Karp, they become billionaires, but almost their entire business comes from selling to governments. I was in Dubai recently, and the guy sitting next to me at the Park Hyatt, Dubai, where he was staying, worked for Palantir, and he was working for the local government. So it's, there's a lot of subsidies for the military contractors. Palantir, you see companies like Anduril, probably Skydio, they exist because of military contracts. And that's why you see a revolving door between DC and these companies. So you look at someone like Mike Gallagher, who was a congressman, who was one of the lead critics or China hawks on the US-China Congressional Committee. He quit in the middle of his term to join Palantir. So I think I don't want to call it corruption, but there's a revolving door between Silicon Valley and DC where they're profiting over fear-mongering about China and profiting from these endless wars that we have in America.
But often when we hear about the Chinese economy now, it's in the context of the trade war with the United States. And only a few years ago, we were told that the U.S. would break the Chinese economy by rolling back its technological development. A lot of this was backed by the former CEO of Google, I think it was, and the assumption that the tech giants in China couldn't survive without American technologies. This was especially the case during Trump's first administration. But now instead we see these AI bubbles forming in the United States. We see China gravitating more towards self-sufficiency. How did this happen? And well, how do you explain this development?
Well, I think again, it's China had to do. Their back was against the wall. If they didn't do indigenous innovation, if you didn't focus on improving the education sector, then China would be contained and destabilized. And that's why, over the last 6-7 years, the wealthy 10%, they've had weak sentiment. Now, part of it is self-inflicted by the Chinese government that, they cracked down on Alibaba and Tencent. And I think that was a great thing. I actually have a whole chapter of this in my book, The Split, where the crackdown on technology was good because it created the opportunity for little dragons to emerge, like Douyin or Pinduoduo or Cabricom. I think the duopoly of Tencent and Alibaba was strangling innovation in the country for 10-15 years. So the government was right to crack down on it, but they cut too far to the bone, and they didn't, frankly, explain themselves well, not only just to the international investing community, but also the local domestic business community. So I think Chinese have lost a lot of their animal spirits because of that. And then they were scared. They were scared that the United States under Biden was going to contain China the way that America has contained Cuba, Iran, North Korea for generations. And so Chinese, again, they have 20 million US in household savings, but they just weren't spending that money. They were keeping that money for a rainy day in case the geopolitical situation would continue to deteriorate. There's a real fear under Biden that no matter what China did, it was an ideological war. Liberal democracies versus communist authoritarian nations, the good guys versus the bad guys, cowboys versus Indians. And so these wealthy 10% of Chinese were quite concerned and didn't spend money. But what we've seen, Glenn, and this is why last January I turned more optimistic, was that you've seen green shoots in animal spirits. You've seen DeepSeek come out. You've seen Cabricon come out. You've seen Ne Zha 2, which is the best-selling movie of all time at, $2 billion. You're seeing that China in the last 6 to 12 months have finally been able to overcome some of those sanctions and export controls. It's not going to be easy. You're right. I'm not a China bull economically right now. You're not going to see 8-10% growth. It's not going to boom like it did in the 2010s, but the economy is stable. It's strong. There's pockets where one could invest and make money. And most importantly, it's far better than what a lot of people in the Western world think. And that's why China is winning the trade war against the United States, right? Like Scotty Bessent, the Treasury Secretary, said that America has all the cards. But here's the thing, Glenn. Anything that America can make and sell to the Chinese can make on their own, like semiconductors, or they can buy elsewhere. So instead of buying American oil, they're buying oil from Canada. Instead of buying soybeans from America, they're buying from Brazil and Argentina. Instead of buying American beef, they're buying from Australia. So the second part is the overall amount of exports. China's not really an export-led economy anymore. It's more a domestic economy. So exports to China, from China to the US only account for about 2.5% of overall GDP. So this shock and awe strategy of Scotty Bessent and Trump in the trade war was misguided. It failed. Now, I know Scotty, not well, but I used to advise him when he was at Soros Capital. And the last time I spoke to him was 2012, 2013. And even at that point, he underestimated China. He said China is a communist nation and by default will collapse because it's communist. And so when you have ideologues like this that are leading the trade war, that are leading our economic foreign policy, and they don't have clear, strong, pragmatic, non-ideological analysis of China, they put us in the wrong direction. And that's why China is thriving right now, and the United States has failed in the trade war so far.
Yeah, no, I've heard him make this argument. I think this is quite well, a reference to this argument that is made in the past. But in this trade war, though, it seems that Trump was banking on the tariffs being quite successful, and indeed, by putting tariffs on China, yes, the Americans are consumers are paying for this. But again, the main point would be for American companies to get a competitive advantage vis-a-vis the Chinese companies who have to pay, or then the consumer has to pay this tariff to buy Chinese. So, but how do you see the success of the American tariffs or lack of success?
I think the tariffs are total failure, right? Now, it hasn't hit inflation as much as people think it would, and as much as I predicted it would. And the reason why is Trump has made a lot of exceptions, Glenn. So you're not seeing the full 48, 50% tariff against China or India. You're seeing, some sectors are smaller. Now, I'll give an example. I was meeting with the CEO of a major apparel company recently, and he used to do all of his sourcing from China. Because of the trade war, he started to take a China plus one strategy. And he looked at sourcing from Taiwan, right? Democracy. So obviously Taiwan-made products should be welcomed in America. India, right? Modi is best friends with Trump, and Vietnam. And so he moved everything to these three countries. But he told me a couple weeks ago, you know what, Shaun? I moved everything back to China because it's actually cheaper to import his apparel from China into the US because of those exceptions than from Taiwan, India, or Vietnam. So the tariff war, I think, this is sort of Trump's strategy in everything. He does the shock and awe. He screams, he bellows, he waits to see what sticks. Will people push back? If he screams a little bit more and exerts leverage, will he be able to get what he wants or not? So like in Venezuela's case, they're weak, right? They have no power, so they had to bow down. In Denmark's case, we'll see what happens. I think I'd be very scared if I was a Dane politician right now, because I think Trump is going to try to steal Denmark. But when it came to China, China had all the cards, right? Aside from having de-risked from the United States and exports over the last few years, China and India combined control about 95% of antibiotic manufacturing. They control about 90% of rare earth refining and about 98% of high-end rare earth refining, magnets. China dominates in rare earths, which propel the world's $7 trillion consumer economy. So in October of this year, China said to Trump and Scotty Bessent, who were trying to raise tariffs again, then we're going to put export controls on rare earths, and we're not going to give anything to you. And it's not just rare earths, actually. I've been one of the biggest bulls on silver for the last couple months. You look at it, China's has put controls on silver exports to the United States. So China's strategy over the last 5-10 years is not just to control mining and access to commodities. It's to get refining capabilities. And so China has refining that America and Europe doesn't have, from rare earths to silver to chromium. And that is the strategy that gives China leverage over the United States. America has really been ignorant when it comes to China. I mean, I'm an American. I love America. My dream job is to be Secretary of State. I love China too, but I've been banned from being quoted by Bloomberg and the Wall Street Journal. I don't have a lot of credibility in Washington, D.C., because I think I am a realist on China. They might call me an apologist, but I'm actually just stating what the reality is in China and giving information to whoever wants to listen. Unfortunately for America, DC and American media doesn't want to listen to what I have to say.
Yeah. No, this whole, what you mentioned with first there was an idea of reshoring, bring things back to US. When it didn't work, they went with the friend shoring. And I've heard the same, that's not really working out either. And to the extent it did work, by shifting some of the trade to India, for example, the Indians also developed increasing dependence on China to develop these products. So it's yeah, this attempt to just do a short, quick fix to cut China out of the equation when it is the leading or dominant manufacturer and technological giant, it does seem foolish. But with this economic war, it's obviously not going as Trump had hoped. But how do you see Europe in this equation, though? Because while Europe's is a more of a passive actor, it still seemed to be one of the major losers of this trade war.
Yeah, Europe should be the big winner of the trade war. Instead, they're the biggest loser. Like, it's very frustrating for me to see people like Kaja Kallas, Ursula von der Leyen, Macron, and Mark Rutte, the former PM of the Netherlands, who's now the Secretary General of NATO. They should be trying to extract benefits from America and from China. Like, they should divide and conquer these two countries because, China, even though it's the world's second largest economy, when you add all of the Europe together, it's almost the same size. So China needs Europe. America wants to trade with Europe. So I think Europe is making a very large mistake, like with the Dutch, with Nexperia, and the chips, with ASML, and allowing to be bullied by America not to export semiconductor lithograph machines. And most importantly, the wording. You see, Rutte, the NATO Secretary General, has said that China is obviously going to force Russia to invade NATO. But he's curiously silent when Trump is attacking Denmark over Greenland. And so I think that Europe needs to take a more pragmatic approach, that they should look for a free trade agreement with China, which I think is something that China wants. It shouldn't put tariffs or bans on Chinese technology companies like NEVs or Huawei. Instead, honestly, I don't mean to be offensive of Europe, but Europe is becoming a developing country or region. And so I understand their fears about the Chinese coming. So what I would do to the Chinese is I would say we want reciprocity. When we, Europe, was the powerful countries and you, China, was poor, you forced BMW and Volkswagen to set up joint ventures. This is what I would force the Chinese to do. I would say to Geely or to BYD or to NIO that if you want to build and sell into Europe, you can. And we're not going to slap huge tariffs, but we're going to force you to set up joint ventures with German or Hungarian or Polish companies. That's reciprocity. I think what Chinese companies and China's government want is a feeling that they could invest in Europe and be allowed to invest and have a playbook or a guidebook on what they can do. Because right now, they're scared to invest because, like with Nexperia, they invested the billions of dollars. There hasn't been any proof of them doing anything wrong. The Dutch operations were stolen by the Dutch government. You saw Huawei invested a tremendous amount of money recently into France to open up a new telecom manufacturing factory, and they shut it a couple months ago before it even opened because Macron's government was saying we're going to ban Huawei products in the 6G or rollout. So, I think Europe should be a natural trade partner of China. Chinese companies want to invest there, but they need to feel that there's a rule of law and not just xenophobia and fear-mongering about China's rise. Europe should be the big winner. I think it's shameful how Ursula von der Leyen and Kaja Kallas have dealt with China in the last year. I think you need to have better leaders.
Well, the benefit when you have a technological competition between countries like US and China is that the technology transfer and all of this, it becomes something they have to negotiate with when they want to compete for markets around the world. So regions like Europe could benefit from having essentially two suitors. The problem, though, is when you have this new multipolar world, is for the United States, it's an interest to carve out Europe as an exclusive zone. That is, you should only trade with the US. And the Europeans seems to fall in line. That is, let's ban Huawei, let's limit the Chinese footprint in Europe. But for the Europeans in the multipolar world, for them to prosper, be relevant, they They should really do the opposite. They should diversify, as you said before, with China. The way they overcome is you have self-sufficiency and diversification, as opposed to having this excessive dependence on one supplier or one actor. But that's what the Europeans have done. But all of this ties into the larger geopolitics, or the rise of China being seen as a threat by the US as well as many European leaders. But how do you see some of the current conflicts which are playing out now? You mentioned Venezuela before. How is this impacting China?
So it's scary, actually. I think the world is on the brink of something very dangerous. I don't believe that Trump is looking at, geopolitical thought, right? I don't think it's a realpolitik, John Mearsheimer, Ash Carter type of analysis. Stephen Waltz. I think we have, I'm not a psychologist, but I think we have a malignant narcissist in charge who's basically making decisions based off of his own narcissistic tendencies. Wherever he can exert power, wherever he can cause fear, wherever he can be the center or the hub of attention. And also, I don't have proof of this, but I think where he wants to profit for himself and his cronies, right? I mean, you see all these people or companies are donating money to him in packs, and then they get huge benefits, whether it be stealing TikTok or whether it be, getting cryptocurrency. I think we're in a very dangerous situation because Trump isn't looking at the world through political, geopolitical, ideological views, but through his own mental issues. And I think that's scary. And he doesn't view himself as a president or a king or even a god. I think he views himself as above God. And this is scary. And the second part is that we have, under Trump in the last couple months, the willingness to go too far. So they'll use political, economic coercion on a lot of people. So I've been speaking with leaders from Latin America and from the Caribbean, and they're quite nervous, right? If Trump can take out Venezuela, President Maduro, and say it's under narco-terrorism or narco-trafficking, the question is, well, why did he then pardon the former president of Honduras, who was found guilty of narco-trafficking? And, a lot of these countries, small ones, are scared that Trump is going to take them out, arrest them, do extrajudicial killings like he did off the coast of Venezuela and just kill people, and place sanctions on political leaders and their families. And that's really what's scary right now, because it's not just people and the politicians, but they're going after the children. And so a lot of government officials in the global South are saying, we don't want to stand up to Trump because we're scared that our kid who's in the United States and California studying will get sanctioned, will lose his visa, will become unbanked, and will have to leave the United States. And so there's a lot of fear that I've never seen before when talking to global leaders in the political South. I mean, they're used to being pressured from America. They're used to being pressured from China. But over the last 3 to 6 months, we've seen a lot more almost hard coercion on politicians. I mean, you just even see with the ICC, right? The head prosecutor lost his access to Microsoft and so lost all of his emails. You see Carrie Lam, who was the chief executive of Hong Kong during the rioting and terrorist attacks there in 2019. She got sanctioned. The Chinese banks wouldn't even accept her and let her have accounts. So she had to be paid in cash. So there's a lot of fear in the world today about what this realignment of the political order and world order is. And again, I don't think it's spheres of influence. I don't think it's traditional hegemony and imperialism. I think it's, transactional. And I think it's developing from somebody who has above a godlike complex. And I actually like a lot of his policies, frankly. I like his policies more than I like Biden's. But his lack of dignity is what's scary to me.
Well, I like initially the idea of the U.S. pursuing some more aggressive industrial policies to reindustrialize. I thought this was a good approach. I was hoping someone would come in Europe argue the same thing, but But the way he's gone about it through the tariffs and all, it just seems counterproductive to a large extent. But with China's obviously with having this massive industries, it also has a huge dependence on energy. Well, I've heard that China, because China is such a huge energy consumer, it has, for example, in oil, that it has a stabilizing impact on prices. That is, China has built all these massive storages, so when prices are low, China buys a lot of oil to fill up these storages, so creating a price floor. When prices go high, China dips into its storage and, creating more or less a price ceiling. How do you see China in the larger international energy markets? Is this a problem? Is it a struggle about diversifying? Is it aiming for full self-sufficiency? Or and to what extent is from Venezuela to the Middle East, the US now, planning wars one after the other? Is this a challenge to, I guess, energy security for China?
So just to start off on your idea of reindustrialization, I actually agree with what Trump wanted. I don't think he was wrong to say that America needs to reindustrialize. It creates jobs, and just in geopolitical, it's a national security risk, right? It's dangerous when all of your antibiotics and ibuprofen are made in China and India, not because China and India did anything wrong, but they were able to outcompete America. So America needs to create the ecosystem to attract manufacturing, and they should do that, but they should do it fairly, not through economic coercion. And you just look at it, Trump tried to get LG and I think it was Hyundai to build batteries in the southern part of the US, and then the police arrested 400 or 500 of them because they were on the proper work permits. So that just is sort of an example of why America won't reindustrialize until the politicians can get their acts together. Now, when it comes to energy, I think clearly, Venezuela is an important cog, but not a super important cog for Chinese oil. It only accounts for about 4%. A much bigger issue is Iran. Iranian oil accounts for about 20 to 30% of China's oil needs. So this is clearly something that's concerning Beijing right now. What's happening with the instability and the protests in Tehran and the rest of Iran, and whether or not the former Shah's son, is going to come back, and take over if Khomeini is toppled. This is definitely something that's scaring China because they still do need oil. Now, they're trying to reduce their oil dependence, but there's only so many oil reserves they can get, which is why there's a lot of I think tension over the South China Sea, because there are a lot of oil deposits that haven't been used yet, but China wants to stake out its territory to say that these deposits are theirs. But China is pushing very hard in nuclear. They're pushing very hard in wind turbines. Like if you go into Inner Mongolia or Hubei, Xinjiang, a lot of provinces in China, you see wind turbines dot the entire landscape. So I'm not sure what Trump was saying the other day when he said that China doesn't have windmills. I mean, they're all over the place. They're just giant. But clearly you still need oil. Even with all of the renewable energy, the nuclear power, China still is going to rely on importing from Iran and other countries. And that's why what happens the next couple weeks in Iran is going to be critical for China's economy and sufficiency on oil use.
Let me just, as a last question to ask, what do you see happening in China now over the next couple of years? So what is the main, direction, or not a crystal ball, but expectations based on where they're going?
I think, China's government has a different philosophy than America's government. And when you look at America, I think their leaders want to get voted in. And so they focus their policies on placating the people in their district, the people in their state who would vote for them. They want to placate the Elon Musks, the Ken Griffins from Citadel, the Peter Thiels, the George Soroses, because they want to raise political donations. And I think that creates the ability for the wealthy to get truly wealthy in America, right? If you are a young 22-year-old and you want to be an entrepreneur, America is superior to China if you want to get rich. Because I don't think that the American government really cares that much about the low income and the middle class. They'll say they do, but at the end of the day, they care about their political donors. In China, on the other hand, Glenn, because nobody votes them, and there aren't regular transitions of power. So if the policymakers don't do a good job, there will be protests and there will be revolutions. And so China focuses on the majority rather than on the minority. So what I see happening over the next couple years is China is going to continue to try to improve the quality of life for what I call on my book, The Split, the 90%. The low and middle class Chinese, they're going to swell over the next 5-10 years to about 800 million people. And they're going to try to give access and better access to healthcare, better access to education. They're going to try to create a moderately prosperous society. So China doesn't want to have a society that's run by oligarchs. Like really what we have in the United States is essentially a plutocracy. They want to help build that middle class. And so I see that's going to be happening over the next 3 to 5 years. Now, in the long term, that's going to create opportunities for the wealthy 10% to make money, you know, selling education, selling healthcare, but it's not going to be the rabid super capitalist free-for-all where you have in the United States where the pharmaceutical or the insurance guys are making 10, 20, 30 million US a year or more as a CEO. You know, in China, they'll say to a CEO, you can probably make a couple million a year, but we're going to put price caps on so that the 90% can get access to the newest cancer treatments or the newest treatments for diabetes. So I think China is going to continue to grow well, steadily, and have a fairly healthy environment, you know, a safe, good quality, robust middle class. But again, if you want to get crazy rich, go to America, go to Austin, maybe go to Silicon Valley. It's not going to be in China. China is going to be a moderately prosperous society.
Oh, that's interesting. Well, before you go, where can people find you?
So the best ways to find me is in the bookstores. You can read my book, The Split, Finding the Opportunities in China in the New World Order, that came out about a year ago. It's still relevant with chapters on AI, semiconductors, rare earths. And you can also find me on Twitter or on LinkedIn. And I might set up my own podcast in the coming months, but I'm not sure yet.
Thank you so much for taking time.
Thank you so much, Glenn, for having me. It was a real honor. Happy New Year to you and your audience. And thank you for allowing me to provide perhaps a different perspective than a lot of people might have on China today. Thank you.